Hey guys, this is lesson 5.4, rounding out our chapter 5, uh, learning on cash and using money in accounting. In lesson 5.4, we will establish a petty cash fund, we will prepare a petty cash report, and then we will figure out how to replenish a petty cash fund and journalize those transactions for the month. So, what is a petty cash fund? As we've talked about, in general, businesses really use very little actual cash in the course of their business. But there are some times where very small payments should actually be made in cash. Um, these would be amounts, usually very small, underneath $100 for sure, because the petty cash fund that we're going to establish is going to be $100 for the month. So sometimes it makes sense not to use a debit card or a check and to actually pay for some things with cash, and they would usually be very small amounts. And you would establish a petty cash fund. It would be an actual, $100 that the business would probably keep somewhere very safe in a locked register, in a safe, or in a locked drawer somewhere. Because again, it is cash and it's very hard to track records of cash payments. We'll also see what happens when errors happen as well in cash transactions and how to account for those too. So, first, how do we establish a petty cash fund? Essentially, what we're doing here is we're transferring assets from one asset account to another. So, here on June 8th, we're establishing a petty cash fund. Um, we paid cash to establish a petty cash fund of $100. Um, I think that should just say January 19th. So, we'll work on January 19th and forget about June 8th. There we go. January 19th, paid cash to establish a petty cash fund. So, how we're going to fund this is from our checking account or from our cash account, and we are going to establish a new account. Petty cash would be the account title. It is an asset account, and so we're increasing or debiting petty cash, and then we are reducing or crediting cash because we're transferring assets from cash over to our petty cash account, which is new. And we're going to use that for small purchases that we're going to use cash for the month. And we don't have to use all of it every month. By all means, maybe some months we will use all of it, but we don't have to. Making payments from a petty cash fund. Anytime you actually make a payment using that $100, you should keep record of it. And that is through something like a petty cash slip or a small memo form. But some key pieces of information, because you are going to have to journalize all of these things to keep track of these different things, because maybe you pay for a newspaper ad in this sense. So you write the date, who did you pay it to? Dispatch would be the name of the business. It was for a newspaper ad in the amount of $14. Under the account advertising expense approved by Michael Delgado. It's petty cash slip number 1. And so you are going to end up having to journalize these things, because this, although it is a small expense, is still an expense. And on your income statement, you definitely want to be able to see the breakdown of those different expenses to see how much you're paying for advertising, how much you're paying, every month, every year, whatever. So throughout the month, you're making petty cash slips every time you pay cash out for something. At the end of the month, you are going to prepare a petty cash report to see how much money you have spent and how much money you still have on hand. And this is where sometimes there are errors made during the month, right? So sometimes you might actually count up the cash that you have and compare it to what you thought you paid for, and you might be a little short or a little over that amount. So if you are less than the amount that those combined expenses make up, you are short, you're cash short. And if you have extra money, you are cash over. So a petty cash report then, on the other hand, is the actual report that you will prepare. This is the first step on your Cengage MindTap assignment, and I'll show you the answers for that in just a moment. But this is a monthly report that you would prepare. Start off with the date. You're going to list all of those different petty cash slips and the amounts here, starting off with $100 for the month, because that's how much we used to establish it. We had all of these expenses come out. So $100 minus these expenses gives us $34 left over. Those were our total payments. Recorded amount on hand. So it says we should still have, of that $100, after we subtract out 34, should have $66. However, when we count that money, it looks like we only have $65 on hand. So we are short $1, which means that the amount we need to replenish to get back to our $100 for the next month, because we want to keep it at $100 every month, would be 35 actual dollars. And we are going to record this cash short in our journal entry. And so when you replenish it, you're going to just make the same transaction as you did before. You're going to transfer assets from cash to your petty cash account. So you are going to debit petty cash, and you are going to credit cash for that $35, because it turns out you need $65 to make back to 100. So that's the transaction you're going to make at the end of the month. So replenishing petty cash and how you actually use this petty cash report to journalize the transactions. I'll show you in Cengage MindTap how to walk through this. The big thing is, though, that you're really only making one transaction, but in previous transactions, most of the transactions you recorded all were recorded on one line. Some were recorded on two lines. These could be recorded up to 3, 4, or 5 lines for one single transaction. So it's going to look a little bit different than what you guys have seen so far. But the idea is that we spent $35 during last month on miscellaneous expense, advertising expense, and then we were off by $1 through an error, maybe. And so we have to record those 3 things equaling the $35. So let's have a look on Cengage MindTap. Again, this is pretty much the answer to the actual assignment. You can go back and refer to it. But let's look through. Here we are at the 5-4 end of lesson review, working together. And here's the answer for the petty cash report. Make sure to type out the full date. All the information is right there. You can use all the information here. So amount and fund was not 100, but our petty cash report in this, our petty cash fund in this example was $200. So we started off with $200. The petty cash slips, we made payments for postage expenses of $24 and $20 for miscellaneous expenses. So we do those things, postage expense for $24, miscellaneous expense for $20. We add those 2 things up, equals $44. Carry that over to this amount. And so recorded amount on hand, $200 minus $44 equals $156. However, it looks like the actual amount of the petty cash box is $154. So when we counted it at the end of the month on November 30th, we found that there was only $154. We should have had $156. So we were short $2. You record that short right here. So $156 minus $54 is $2. We were short by 2. So 44 plus 2 gives us 46. So that's how much we need to replenish to bring us back to $200 to start off December 1. Just a note, again, kind of a little funky part about Cengage MindTap. The custodian, since this is a business owner, you're just going to enter student's signature in cells where you would enter a signature. So you literally type out student's signature. And again, it turns red if you're not typing it out correctly. So make sure just to type in that. And then we will move on, and I'll show you how to journalize these transactions. So here is our petty cash report, the same as the one that we previously filled out. And now we need to journalize these transactions here. Journalized transactions related to petty cash completed during November of the current year. Use page 22 of the journal. The abbreviation for check is C. The first transaction that we're actually going to do here is going to be to establish that petty cash fund on November 1st at the beginning of the month. So we're going to start off at November 1 for petty cash. Because that's going to be the transaction. So we're going to go back. We need to use the petty cash report and also the transactions too. And we'll record both of these transactions here. But the details for this November 30 transaction come from the petty cash report. So I'm just starting off with establishing the petty cash fund first. We have our document number C64. We are going to debit petty cash for $200, and we're going to credit cash for $200. So again, we are transferring assets from cash in the amount of $200 to our petty cash fund right there. So that is the first transaction. The second transaction happens on the 30th. And we are going to start off. We know that we need to journalize $46. The document number was C86. And remember, if we need to replenish $46, we know that the debt or the credit is going to come from cash again because we need to pay out $46 from our cash account to petty cash. But that's the credit. So we're starting with the credit. But now we need to go back to our petty cash report, and our debits to petty cash, the transactions that decreased our petty cash, come from postage expense, miscellaneous expense, and our cash short. So we'll start off with postage expense. And so we need to debit that for $24. Next one is miscellaneous. Miscellaneous expense. And we are going to debit that in the amount of 20. And then cash short. So the title here is cash short and over, because it comes from right here, cash short and over. So again, it's not just cash short. In that sense, it is a short. If it wasn't over, it would go into the credit column. But since it's a short, it's a debit column because it's decreasing our cash account. But the actual name of the account is cash short and over. And that debit was for $2. And that's how the transaction looks. As you'll notice, we have 3 lines for one transaction, and we have a number of different things going on here, but we only write the date once, not for these, and we only write the document number once, not here and here. And it just shows us when you're glancing at the journal that these 3 items are all part of one transaction. So if we were to add up 24 plus 20 plus 2, it equals 46. Our debits equal our credits, and so that transaction is in balance, and that establishes a replenish of our petty cash account.